Good morning, good afternoon, good evening, wherever you're joining us for today's webinar. The oil and gas industry is facing unprecedented levels of complexity and volatile commodity prices, aging assets, decarbonization, the environmental, social, and governance commitments, digitalisation, and increasing regulations are forcing companies to rethink their approach on capital planning. This presentation, Enbridge Case Study, Best Practice for Capital Planning Excellence, will be presented by Carmen Benoit, Manager, Asset Management Strategy and Planning at Enbridge, and Julian Lambert, Senior Sales Director for the Middle East and Africa at Copperleaf. Julian is our mechanical engineer with 30 years experience in utilities and energy, as well as a long and successful track record of driving business growth in the Middle East. Julian joined Copperleaf in 2019 to lead the development of its Middle East businesses and is working with heavy asset organizations across the region. So I'm going to hand it over to Julian right now and we'll get started on our presentation.
Thank you very much for that introduction, and I'm going to start by introducing Carmen. So Carmen started her career with Enbridge 20 years ago and has a background in operational risk management, supply chain management and insurance, and she's now the Manager of Asset Management Strategy and Planning, which includes asset investment planning and managing, or capital planning, within the Enbridge Liquids Pipelines business unit. So Enbridge and Copperleaf worked together from early in 2019 to design and implement the Copperleaf Decision Analytics solution and the Enbridge Value Framework as part of an enterprise-wide asset management transformation. And it's great to have you with us, Carmen.
It's great to be here. Thank you.
So I'm going to start by taking just 5 minutes to introduce Copperleaf. Copperleaf, we're a company with a bold vision, transforming how the world sees value. So what do we mean by that? Well, traditionally, we've used production and financial measures as the primary indicators for valuing investments, and we're pretty good at doing that. It's much harder to put a value on, for example, the mitigation of risk or the reduction of emissions. So at Copperleaf, we've developed an analytical decision-making process that assigns a quantified dollar value to all the value drivers of any investment. I say dollar, of course, it's any economic unit. And then we've built an enterprise-grade software suite to support this decision-making process and underpin it with a proper governance structure. So there's also AI optimization techniques and integrations into your other systems. And this has been tremendously successful, enabling us to grow our R&D base to be by far the largest in the sector and to grow our company footprint across the world. And I'm delighted to say that last week we were able to complete our initial public offering, which is really exciting and a great testament to a decade of hard work from everyone. Of course, this is all only possible because of our amazing and loyal customer base, primarily starting for us with electric utilities in North America. And then from there, we built out new markets and new sectors. So we moved into gas and water utilities, transport infrastructure, oil and gas, as in where Carmen comes from, and government. And so altogether now we have some 65 well-known capital-intensive organizations as customers, and we're delighted to have them there. I mentioned at the start, this is about a holistic view of value. And I want to reinforce that notion that the value comes in many ways. And some of these ways don't put dollars in your pocket today, but do still deliver value. And we know these things deliver value because we're prepared to pay good money for them. It's just harder to quantify that value. So at the center of our solutions is a value framework, which is used to do just that. It starts by defining your strategic goals and the quantified value measures that together quantify progress against your strategic goals. And behind the framework is a set of value models that give you an efficient, objective, analytical approach to capturing the value that each investment drives against each of these key dimensions of value. So the value framework is the critical ingredient, the secret sauce, if you like, that makes the analysis objective and quantitative. And this then allows us to deploy some serious maths. And here we see an overview of the decision-making process. And what you can see, if I scroll in a little bit, is you've got a set of candidate investments. This could be 100, 500, coming from all over the business, whether it's refurbishing an aging asset or expanding the business or adding new technology or adding a community centre. The process is the same. So you're capturing the business case in the Copperleaf solution. You're able to then value the alternative solutions using the value framework and add all of those into a portfolio. And then you can optimize that portfolio, honoring the constraints on your portfolio, honoring all the constraints in order to get the highest value output portfolio for the business. And then there are additional processes to manage the additional changes that come along, as happens through the year, enable you to refresh that portfolio, as well as processes to understand the long-term needs, the long-term investment needs of your assets going out way into the future. And for some of our customers, that could be 20 or 50 years. So I think I've stuck to the agreed 5 minutes. And now, Carmen, let's turn to you. And could you start by giving us a little bit of an overview of Enbridge, paint a picture for us?
Thanks, Julian. Enbridge is one of the largest energy infrastructure companies in the world, and we fuel the quality of life for millions of people every day. And we're proud of this. Our job is to provide the various forms of energy North Americans need in the safest, most reliable, and sustainable way. Enbridge operates the world's longest and most complex crude oil and liquids transportation system, with approximately 17,000 miles of active crude pipeline across North America. We move about 25% of the crude produced in North America, delivering more than 3 million barrels of crude oil and liquids every day. Our natural gas transmission and midstream pipelines cover about 24,000 miles, and the network is unrivaled in the industry due to its scale, scope, and connectivity, moving about 20% of all gas consumed in the United States. Enbridge Gas is North America's largest natural gas utility by volume and third largest by customer count, with 3.8 million residential, commercial, institutional, and industrial customers in Ontario. Enbridge Gas has been delivering energy for 170 years. The Enbridge Gas network consists of thousands of miles of gas distribution main lines, service lines, and transmission lines. Since Enbridge's initial investment in a wind farm in 2002, we've committed more than $7.8 billion in capital to renewable energy and power transmission projects currently in operation or under construction. Our operating renewable energy portfolio, which spans North America and Europe, includes 20 wind farms, 4 solar energy operations, 5 waste heat recovery facilities, a geothermal project, and a hydroelectric facility. Our renewable energy projects in operation have the capacity to generate almost 2,000 megawatts of net zero emission energy. In operation, these projects create enough green energy to meet the electricity needs of nearly 940,000 homes based on net generation figures. So we believe ESG is closely linked to the energy transition. And in November 2020, Enbridge announced aggressive ESG goals to guide and shape our company's sustainable and responsible growth for the next 3 decades. These goals included achieving net zero greenhouse gas or GHG emissions by 2050, reducing GHG emissions intensity from our operations 35% by 2030, and increase representation of diverse groups within our workforce by 2025. And at our ESG forum last month, there were various presentations by Enbridge leaders focused on our company's short and long-term sustainability priorities, including emissions goals and pathways, sustainable operations, low carbon innovation, stakeholder and Indigenous engagement, an energized and diverse workforce, and strong governance. With assets across the energy system, we are well positioned to adapt to the energy transition over time while continuing to provide the energy people need and want. So with $95 billion of assets in total, our liquid network stretches across North America, and we distribute gas to millions of customers. We operate in a complex regulatory environment across countries and numerous provinces and states. And I always find this map alludes to what it takes to maintain our license to operate, as well as the coordination required to manage our investment plans for assets at various ages, health and condition with different commercial regimes.
Thanks, Carmen. That's fantastic. And now, before we hear a bit more from Carmen about capital planning and your experiences at Enbridge, we'd really love to get everybody's views on what sort of challenges you're facing in your business. And so, we'd like it if everybody could answer the following question. What are the key challenges in your current capital planning processes? And we're trying to break this down is by are the capital planning challenges more around analysis, such as gaining insight, understanding an objective, quantified valuation of investments? Are they around transparency and stakeholders' ability to understand the process? Or agility, the ability to refresh the analysis when things change? Or governance, ensuring decisions, the process is secure and well executed? Or alternatively, several or all of the above. So if you would give us your answers to that straight away, and we'll continue. Okay, so we're getting quite a few saying several or all of the above. Quite a lot around transparency, people being able to understand the process. Quite a lot around agility, so being able to respond when things change. I think both of these, Carmen, you'll be touching on later. Yeah, so I think we're getting people answering all of them, and we'll be able to refer back to this as we come through the discussion later on. But thank you for everybody for your votes so far, and do please keep on answering them as we go through. So let's now turn, Carmen, to the experiences that you've had implementing the Copperleaf solution and supporting your capital process. Let's start by the history. Where were you? What sort of challenges did Enbridge face with capital planning, and what sort of impact were they having on your business way back at the start?
Just the scale of operations, Julian, that we saw on the previous slide, growth over a relatively short period of time in our company's long history. In our liquids pipelines business alone, we put $40 billion of new pipelines into the ground in a 5-year period. We also started focusing more on renewables, offshore wind, onshore wind, and solar. So our asset base continued to grow, but it changed too, and it got older. So managing our assets at different ages and stages with different commercial drivers creates some complexity for us. So with a focus on growth for many years, in some ways we had to put efficiency efforts on the back burner for existing assets. They're running well and we are certainly profitable, but we could see that we could do better optimizing how we operate and tying investment to long-term strategy and asset needs. So we needed to integrate this continuous cycle that is asset management, understanding what our assets need over their life cycle and what we need out of them to accomplish our business objectives, so we could determine how and when to invest.
Yeah, thanks. And you've spoken that in the past there were a couple of events or situations that really drove you to say, enough's enough. We need to make some material changes in the organisation. So, what were they, and what were the goals?
In this period of most intense growth, the market, the regulatory environment changed. It was clear that the kind of growth we'd seen in the past 5 years was over, and we needed to turn our attention to optimizing our base business, assets in the ground, and look ahead. We could see the energy transition coming, and we needed a way to assess and report on ESG-related investments alongside capital maintenance and asset renewal. And we needed to rise above fixing issues on the fly and focus on a consistent approach to managing our assets through their life cycle in a proactive and predictive way. To make things even more exciting, we significantly accelerated our strategy to adapt to the energy transition with the acquisition in 2017 of Spectra Energy Corporation, which is the largest natural gas transmission network in the US, which materially shifted our business mix and carbon intensity of our operations. So we had a number of transformation initiatives in design. We grew about 40% overnight with the acquisition of Spectra, and we needed to set to work integrating great people and great assets. We needed to assess our business processes end to end, rationalize our systems, and create one company. And it was at this time that our president said, the time is now to implement asset management. It is the glue, it is the cornerstone.
I love that metaphor, the idea that the asset management is the glue that brings together operations, engineering, finance, business, all these different parts. Can you tell us a bit about the process that you went through at this stage?
From a broader transformation perspective, a transformation governance office was stood up to manage the impacts of many transformation programs underway. For asset management specifically, we developed a robust fact base for each business unit. We worked to understand pain points, and we ran a number of workshops to pare down our objectives to create an achievable plan, setting specific goals for step changes within a 3-year period. And we aligned 70 directors and vice presidents across the organization around these goals. We also facilitated alignment around our enterprise design principles to ensure progression toward our 3-year step change and our 10-year full potential vision. So our number one principle is to balance cost, risk, and performance across the asset lifecycle. And we agreed this included all commodity carrying assets, no opt-outs. We knew we could leverage existing work and didn't need to recreate the wheel. Our utility had begun their asset management journey about 4 years prior, and we could leverage existing resources and best practices that they had implemented. We also knew we needed to meet each business unit where they were at. We had to create practical solutions for each BU's requirements, operating philosophy, and culture, and consider their starting points and how far and how fast we needed to move each one. Going back to the exercise of identifying and understanding pain points, in our fact base for transformation, it was unanimous that we had to focus on capital planning first. We had to follow the money, the paths to cash, how to resource the things that are important to our business. Starting here forced our organization to determine the processes, roles, and systems we needed to make better decisions for our assets. And this is how a broader asset management transformation starts. When hundreds of millions of dollars are at stake, people care. And I'm being a little cheeky here, of course, because transformation doesn't just happen. It's complex, it's emotional, it's cultural. So the approach to change needs to be intentional, planful, and inclusive. And it takes time.
Okay, so then you decided to take a broad approach. You're using a software solution, but it was also part of a business transformation, and there are clearly tactical elements and strategic elements, but it sounds as though culture played a really important part in this as well. Mm-hmm. So why was that?
We certainly took a broad approach, yes. As I mentioned before, we had a number of interdependent transformations underway, notably an enterprise resource planning transformation. And we needed a framework for end-to-end business processes to start from to ensure we made the right decisions for right design decisions for new software. So these were the tactical, nitty-gritty, and complex items we needed to think through. But from a pure capital planning perspective, we needed a way to understand the variety of needs for our assets of our base business if we were going to optimize asset planning. This is where this concept of an unencumbered list came from. Our CEO asked us one day, what is that unencumbered list? What is the list of needs for our assets, and how do we develop investment scenarios that would balance cost, opportunities, and risks over multiple years, that would be agile and scalable to respond to market changes, regulatory changes, and factor in continuous efforts to optimize our base business. We feel very strongly at Enbridge that asset management best practices and principles unite safety and competitiveness. And before our implementation of asset management, perception was that these two things could not coexist. We could have one or the other. And you can imagine how this manifested in our company culture, especially at capital planning time. It was like preparing for battle and painting a picture that likely resonates with most. It's 30 people in a room in the middle of a hot summer for 2 weeks, including vice presidents and directors pouring through hundreds of investments line by line, trying to convey, or more so pitch the attributes of an investment from a profitability or a safety perspective. We just couldn't go on like this. We got it done, but it was painful for all, to say the least. I'm sure this resonates with most. It's very common. This isn't just a challenge that we had at Enbridge. So we had to focus our company and rally our people to create an asset management system that enabled dynamic, fact-based decisions with the life cycle of the asset in mind, with a framework that connected all asset management initiatives from both a safety and competitiveness perspective, that clearly defined asset ownership, that integrated asset planning and create more efficient interactions between domain experts and help prioritize work. And we needed to focus on data-driven decisions facilitated through a value function.
And so, having been through all this, what was the outcome of the optimization of this planning process, planning cycle?
We were able to articulate risk, compliance, and asset renewal needs across a number of value measures in our value framework. We were able to cut the data from optimization in a variety of ways so it was impactful and meaningful and consumable for any level of leadership. We're able to articulate where we were making suboptimal decisions and where we could capture additional value. And we were able to demonstrate that we were spending in the right place. With the value framework in place, we know we're spending in areas that create the most value for Enbridge. So with this diagram, you might be wondering, why did we approve here low value investments? You can see in the bottom right hand or bottom left hand corner, that is, this section in the purple. And we might need to consider recalibrating our value framework. We designed it 2 years ago, and we value being in compliance, but the value of compliance might not be registering true here. So in the end, the Copperleaf suite is decision support. It's the asset management ecosystem working together that drives to decisions. And we might make decisions to proceed with investments that aren't as high a value in some cases, but again, this might indicate the need to recalibrate. But at the end of the day, we were able to secure additional spend on maintenance capital because we were able to articulate these needs. And all of the green dots you see here on the page are the additional investments we were able to fund with that capital.
Fantastic. So that's exciting results and demonstrates the value that's there to be had. How did all this impact the decision-making culture at Enbridge?
I always like to think of this as, where did we come from and where did we head to? So we went from focusing on we need more money, getting more money, to optimizing the value of the budget that we have. We went from reacting on the fly to changes in the industry to focusing on long-term planning that maximize cost, risk, and performance in the asset lifecycle. And we went from that 30-person, 2-week meeting of leaders to set our long-range plan to having a process that pushes decisions down in the organization with value return as key decision criteria. We went from my project is a must-do to having clear decision criteria for must-do investments. And we went from thinking of data gathering as optional or disorganized to we need asset health and condition data to make good decisions.
Okay, so where did you land?
We facilitated a value-based decision for our 2022 budget and long-range plan. We articulated the risks, compliance, and asset renewal needs on the system. We demonstrated where suboptimal decisions were being made, and we found an additional $361 million of value. And we created a mind to ours behavior change and mindset shift through all of this. So there's no turning back from the maturity gains we've made. The old way is truly in the past. Implementing a centralized capital planning process with decision support tools like the Copperleaf suite create the ultimate light bulb moment. The brighter the light bulb, the more darkness you might see, or the more you mature capital planning, the more areas of improvement you identify within the broader ecosystem. So I have no doubt that our next planning cycle will be that much easier to facilitate and will create an even better decision for our company.
Fantastic. Thank you very much, Carmen. That's brilliant. I've got a bunch of questions that are coming in from delegates now. So as I'm just sort of trying to aggregate them and sort of join some together. And now I've just lost my place on the page. Okay, so I've got a couple here that sort of meld together, and I'll try and phrase it as three questions in one, which is, where did you start? Where did you go wrong? What lessons did you learn? And that sort of a question. Perhaps you could tackle those three in one go.
Absolutely. We had a stepping stone toward value-based decision-making with risk-informed decision-making in about 2015. We experienced the proverbial tipping point at the end of 2014 when our board couldn't approve our 2015 budget because we had $1 billion more of requests over budget. This was 4 days before Christmas holidays, and people across North America were asked to go back to the drawing board and pare back their lists. And we did do this. We did whittle back about $250 million, but with a ton of effort. Then we decided to use our risk matrix to pare back the extra $750 million, but couldn't get the granularity we needed to facilitate a decision with a simple low, medium, and high ranking. Everything appeared as high and must do. Then we went fully quantitative and too fast. We didn't clarify roles for investment owners and had to teach hundreds of people how to do a risk assessment in a short period of time. We were asking folks to do a lot of work they didn't know how to put numbers on risk that we didn't have the data for, or were seemingly in conflict with our Enbridge values. So in summary, we didn't have the data, a process, the capability, or the capacity to do this work, to quantitatively assess risk in the volume we needed to in a decentralized way. So my number one recommendation to companies is to first dedicate a team to capital planning and management. This is not something that can be done off the side of our desks in spreadsheets. Centralize and co-create the process with your most impacted stakeholders. Clarify roles and support stakeholders in building capability. And lastly, don't declare victory too early. The industry changes, strategic objectives change, people change. We need to continuously improve and evolve how we invest.
Thank you, Carmen. The next question coming through, again, I'm slightly paraphrasing, but people worrying about two big issues in terms of implementing this type of software. One is about complexity of the software and thus, getting everybody involved, engaged, and adopting the process. And the other one is about having the necessary data. And again, joining a couple of questions together, did you worry about the sort of rubbish in, rubbish out issue? What was your experience there?
Yeah, absolutely. In the words of one of my favorite change management practitioners, we just have to start. Whether the data is structured, unstructured, or in people's heads, we just have to start. So with Copperleaf's help, we actually designed an optimization model that did exactly that, created a Weibull curve taking input on end of life and condition data from field operations. So, my advice would be, don't spend a bunch of money on data cleansing, data mining until you know what data is highest value. We have to treat data itself like an asset that needs to be managed through its own life cycle. And when it comes to using that data for optimization, it's iterative. Certainly, it's not just a click of the button. The Copperleaf product suite is decision support, but the clarity of roles in that overall asset management ecosystem is required to arrive at the best decision for the enterprise. So it's iterative. Decisions need to be made along the way. So just have to start.
Okay, thank you. Okay, so I've got a couple of questions coming in about the value framework and about sort of hard metrics against soft metrics. So one is, how does a value framework change the way you make investment decisions? And there's another one about incorporating softer and more qualitative value drivers into your prioritization process. And the rider question there was, does everything have to be quantified?
Oh, great questions. And these were the questions we had as we were designing our value framework with Copperleaf. And the way this changed how we make decisions was it expanded the granularity of our value assessment. So we were able to understand greater depths around risk and threats to the business, compliance, asset renewal, particularly financial impacts like throughput or operating expenses, or how obsolescence is impacting Enbridge, or how an innovation or automation investment impacts employee productivity, or impacts to our cybersecurity. So the process of designing the value framework really draws those questions out and again creates those conversations on what is this worth to us as a business, so that just the process to design the value framework starts to unpack some of those challenges for companies and again understand what value models need to be designed to factor some of those softer items in.
Okay, thank you. Next one is about when things change. So how do you deal with changes to the plan, like a major overrun or ... a pandemic, or need to turn your attention to a component of your ESG targets?
Oh,
I guess that's like a change of strategy partway through the year.
Yeah, such a good question. And maybe I'll answer at a high level and then talk about the finer technical bits. So following the turbulence of the last few years, I can now confidently say that we implementing our asset investment planning framework, our capital planning framework, just in time, it enabled us to be agile in the face of changing drivers during this time. So we're grateful that the timing worked out to work through the past couple of years. Now, from a technical perspective, sometimes we're going to see changes in, at Enbridge and Liquids Pipelines. This means changes to hourly throughput impacts or to our throughput forecast with changing customer drivers or market drivers. We can change the global values in our value framework to support those global updates. And of course, we can always re-optimize. So we're considering re-optimizing here shortly around the corner, actually. So we can use the value framework and use the software to support those re-optimization needs.
Thank you. And the next question I've got is about phasing. So was this implemented with a big bang approach, changing the previous way of allocating capital? Is that something that you can address?
Such a great question. I would say that this has been my journey in capital planning started at the end of 2014 with that tipping point. And so again, we had that stepping stone to value-based decision making and centralizing the process when we facilitated decision making based on risk. And so there was certainly a slow burn, but it accelerated incredibly when we centralized the process. We formalized the decision around creating a team that would manage capital planning going forward. And that began with that the declaration to the business that the time is now to implement asset management. So it really gave us the license to make some big changes. So I would say it was kind of 50-50. There was a lead up to this transformation, and but with some executive change sponsorship support, we accelerated that transformation in capital planning.
Okay, so the next question I've got is about the challenge of implementing such sort of enterprise-wide software and adopting such enterprise-wide software, and why and requiring a dedicated team. Can you comment on I guess the question is about sort of what sort of team you needed to be able to deliver the strategic, tactical, cultural changes at Enbridge.
Fantastic question. I feel really strongly about this, that as we start to think through the next phase of our transformation in asset investment planning or capital planning, we're starting to think about the same tools, the same principles, the same process to expand this framework into making OPEX decisions and, in fact, counter-informing our capital and our operating budgets, eventually leading to making decisions based on total expenditure or total cost of ownership. And that's a huge change for our organization, for any organization for that matter. So again, highly recommend designating a team, standing up a team around asset investment planning, including capital and operating. What are the skill sets? What are the capabilities you need in this team? We always talk about we have a chief optimizer, someone who's going to optimize those budgets. We have someone who runs the process and makes sure that we're engaging stakeholders in the right way. And we have a team member that's focused on governance and making sure that we're playing within the process in the right way and that we're adhering to all the control points in our process. So that's the capital planning or asset investment planning part of our team. But from a broader transformation perspective, we think about all the things that support capital planning or asset investment planning. It's what is the strategy for our assets over time? What's the data and information we need? How do we deliver on these plans? And then how do we check back in? How do we check back in on performance? That requires a whole other team, in my view, someone who's going to really grab hold of the management system and focus on its maturity. So documenting processes, managing processes, making sure that the interfaces are clear. So two perspectives there. Take some time, some capacity, and the right capability to manage asset investment, but then managing the transformation overall, working with the ecosystem, likely needs another manager to support that effort.
Yeah.
Did that answer the question?
I think so. We'll see if we get any follow-ups.
Sounds good.
So another question is about stakeholders, and you've referred to stakeholders several times here. Mm-hmm. You've got internal and external stakeholders. You refer to regulators. Could you just give us a sense of, who in the organisation, who were the key stakeholders within the organisation, and if there were external stakeholders that were engaged as well?
You bet. So again, back to that capital planning. I keep talking about asset investment planning because we are merging our principles of processes with OPEX too. So this is overall asset investment planning. So there's that nucleus of folks that we work with day to day that manage our break-in investment needs or our budget long-range plan development. That nucleus would include all investment owners, folks that are proposing investments across our system, and they're supported by conditions SMEs, those folks that know how and why do assets fail. So there's that nucleus in the middle to focus on that foundational paths to cash. How do we resource our assets over their life cycle? But as we think about expanding that nucleus out a level, there's where we start impacting execution teams. And execution teams have a very important part of the value function. So we've got folks saying, this is what we need to address issues with our assets or to capitalize on opportunities. And then we need someone to execute that work. So it kind of goes out from there in layers, again, that broader ecosystem. So those are the internal stakeholders we work with day to day. When we start thinking about bringing that profitability perspective, that competitiveness perspective into the ecosystem, we have to think about our shippers, our customers, and the contracts we have in place with those shippers and customers, and how do we make sure we adhere to the contracts we have, but also invest in the best way. So there are layers. There's an ecosystem here at play. There's a nucleus when it comes to this. How do we make this very hundreds of millions of dollars decision annually? But there's also a number of internal and external stakeholders that make this happen, that have inputs to the process.
Thank you very much. I've got another question here about risk. Mm-hmm. How do you assess risk and prioritize interventions?
Great question.
Sorry, carry on.
So I would say that the how we assess risk is built into our value framework. So the foundation of the value framework is our risk framework. How do we assess risk? We do have, from a qualitative perspective, of course, we have a standardized enterprise-wide risk matrix. But when it comes to digging into that granularity that we so needed back at the end of 2014 to facilitate risk-informed decision-making when we didn't have value-based decision-making in place, we started with a qualitative approach. And then we started to look at what really is driving risk on our system. It goes back to not going out right away and spending a bunch of money on data mining until we really understand what is the data we need the most. So for us, we had a big shift to really needing to understand what are the financial risks, what's the granularity of the financial risk on our system. So I think it really goes back to understanding the risk drivers before we start gathering the data to increase maturity of how we're assessing risk. So we could start with qualitative, of course, but really think about how do we move to a more quantitative approach. So how do we assess risk? We do have a risk matrix. We do have quantitative risk methodologies and practices by asset class. And we use the value framework to take those risk assessments into our decision-making process.
Thank you. Carmen, we just got a very short period of time left. Did you want to cover a little bit on the ESG comments and that you mentioned earlier, and the statements that the CEO has been making?
You bet. They're aggressive targets we've got coming down the pipe here, so to speak, to meet our 2030 emission reduction targets and our 2050 net zero target. We will pursue multiple pathways. So our challenge being twofold. So we need to meet the growing global energy demand with affordable and reliable energy, but also reduce emissions. So I'm proud to say we had the foresight to develop some of these, the functionality, the value measures, value models into our value framework when we started design in 2019. So as we start to see ESG related investments in our capital planning process, we have a way to assess those at this point, and therefore we have a way to track how we're spending on these things. So it's a great mission here. We've got a great challenge ahead of us, but I'm confident that with the processes we have in place, we can optimize our ESG related investments alongside everything else.
Carmen, thank you so much for doing this at such an early time in the morning for you.
My pleasure.
Fantastic. I've really enjoyed doing it, and all the best. Have a great day. And
thank you.
I think the organisers will take over from there. Thank you to everyone for attending.
Thank you very much, Julian and Carmen, for your super interesting and very informative webinar. To all of you watching, if you would like to listen again, this webinar will be available on demand shortly. And just to wrap up, I'm going to say thank you for watching wherever you are and taking the time to listen in for today's event. And we look forward to having you at one of our upcoming events or webinars, and you can check those out at www.industrialtransformationnetwork.com. Have a great day. Thank you so much, everyone.
Thank you.
Thank you.